Welcome back to the first brief account of 2023. My name's David Gooding. I'm a partner at Mills Reeve and I head up our accountants liability practice. I'm absolutely delighted today to be joined by Jonathan Pryor, a partner at Evelyn Partners and also a forensic accountant who specialises in audit negligence. Hello, Jonathan.
Hi, David. Thanks very much for inviting me.
No, you're very welcome. It's very good to see you. What I'd like to do is just have a short discussion today around some of the trends you're seeing in the audit world, and in particular, some of the types of claims you're seeing and the impact it's having on firms and their insurers. But I wonder, Jonathan, whether you could perhaps just start by just telling our audience briefly the difference between an auditor and an accountant.
Well, it's an interesting question. So clearly the accountancy profession is intended to cover a range of different things, including accounting, i.e. how the financial statements are actually made up and what's in them, but also a number of other things such as insolvency practitioner role and other roles in relation to tax and so forth. So the accountant's role is quite broad, but a subset of that is the audit world and the audit discipline following auditing standards and the like. And I think it's fair to say if we go back in time, that many accountants were actually conducting audits almost as a sideline. If you ask them the question, what do you do for a living? They would say, well, I'm an accountant. But actually what they were doing for most of the time was audits. And the audit world was a very strange world going back 10 years plus. It was a world in which there were very clear rules about what one was supposed to do. They were set out in auditing standards. But a considerable proportion of the auditing profession didn't know what those auditing standards actually were. And in fact, I remember doing a presentation a few years ago around that sort of time to some fellow partners, audit partners, I should emphasize. And the thrust of the point I was making is that if you were to ask those people what's any particular IFRS 3, say what's in that, they would all know immediately what that financial reporting standard was. But if you ask them what's ISO 550, the auditing standard, even though their profession was audit, they would not know. And indeed, I actually suggested to the partners, do you know what, I think it'd be a good idea if you read some of the auditing standards. There's some fantastically useful stuff in there. And the response from one of the more senior individuals reported on the lines of, I don't need to. I've got an audit manual that tells me what to do. I don't need to read the auditing standard. And I can't think there are very many other professions that were in that sort of mindset, where those people who were in the leading role in that profession really thought about accounting. They were much more interested in nitty, difficult, challenging financial reporting questions than they were about actually the core bit of business that they were supposed to be doing, which was audit. And certainly the underpinning of the professionalism of it was lacking. And then you've got to also put onto it, again, going back in history, the fact that audit was very much part of the way in which accountancy firms made money. And because it's always a difficult balance, when like any audit, how much resource do you put into the audit, where do you put it? That judgment effectively being made by the audit firm, there was an inevitable pressure on some auditors to do less work in circumstances where the work was really fully justified in order to make a financial return. You always had that tension between profitability and quality. And the balance, unfortunately, going back a few years, was very much shifted in the wrong place. It was shifted on the penalties for failure to do audit were often very limited. Quite often, a poor audit had no consequence. The business was still thriving. It still carried on. Nobody ever saw the fact that the audit files were rubbish. Nobody ever actually appreciated that. And at the same time, if you really do a proper audit, what happens is you find mistakes in the accounts, you have difficult, challenging discussions with the finance director, and then you get sacked. So what kind of incentive is there to do a good quality audit? And so it doesn't surprise me, really, that the world that we lived in at that time culminated in a plethora of quite significant claims against auditors and failures. And I think you only really need a challenging economic environment, the beginnings of a recession, and some of these businesses reporting numbers which are really not justifiable, get into cash flow difficulties, get into insolvency, and then you see the real failures of the audit come to light. But then what's changed? So quite significant things have changed more recently. So we had, I think, the growing awareness amongst government and amongst regulators that it just really wasn't good enough. What the audit profession was doing was failing. So there were examples, of course, of good quality audits all over the place, but there were far too many, and particularly of big corporates that just did not meet that test, whether you refer to BHS or Carillion or any of those sort of really quite high profile businesses, which have huge consequences for the economy and the employees, not only in those businesses, but all of the other connected corporates that work with them. And I think as a result, there's just the growing awareness, and by the way, not only in regulators and government, but also within the audit profession itself, that things had to change. And we've seen quite a few changes take place, all of which have got an incremental effect, and all of which I think are for the good, or at least most of them are for the good. So the regulator now has far more teeth, is investigating far more seriously and much more professionally than it used to, and is also levying very much more substantial fines. And that is waking the audit profession up. Not surprisingly, there's a financial implication, but the really big cost when you have an investigation of that kind is the reputational issue. It's just an inevitability, and the same is true about litigation, about claims, is that they just last a long time. They're 3 years, order of magnitude, and sometimes longer. And throughout that period, the personal strain on the individual partner, no matter how much support the firm gives to them, is phenomenal. Their livelihood is being taken away from them. And actually, in some cases, very literally, they've been barred from doing audits or something equivalent as a result. We've also, of course, had a very significant litigation rise, a lot of cases because of failures, and because I think also because of the Manchester Building Society case to some extent, and also ASIC-Co. Obviously, that's not my domain, but nevertheless, those have had an impact in making it generally easier and more beneficial for a claimant to mount a claim. And I think as a result of that, we've now seen a world in which the auditors are now very much more risk averse, and it's had really quite profound changes. The changes lie partly internally, partly culturally, so much more pressure on the individual teams, audit teams, to do good quality work, far more internal review, far more awareness of that distinction that we opened up with between an accountant and an auditor, that really, if you're going to do audits, you have to know auditing. You have to know what it means. It's not good enough to just be a good accountant and rely on a team below you that's doing the work. The partner, the responsible individual, as or the engagement partner, as the auditing standards refer to it, has to really own the process. And by the way, as an aside, auditing standards have always had quite a strong emphasis on the individual role of the engagement partner. So there are some specific requirements that person, that individual, has to comply with. And certainly I would say from the point of view of the cases that I'm involved with on audit negligence, it's very common, on going back to 2016 to 2019, say, for the engagement partner to be absent on the job. And you can see they did not participate in that really crucial internal planning discussion. Enshrined in several places in auditing standards, it's absolutely fundamental that they are there and they lead that discussion. And yet you can see from the minutes that they were off somewhere else and they weren't there at all. So that sort of awareness of auditing standards being important, all of those things I think are for the good, a raising of quality as a result. And that then has had a sort of bizarre, perhaps almost inevitable consequence that every single audit firm, I think, has shifted from, we are desperate to win work, to we're now desperate not to win additional work. We have far too much work to do. And you can see how that equation works. If you have an audit that perhaps previously you were doing in 200 hours, with this change in mindset, you're now very probably using 350 hours, a substantial increase. And by the way, I'm quoting those numbers because that's linked to some research that we've conducted internally. So there is some evidence, if you like, for that. And it's not only numbers of hours that have gone up, it's also the mix of people in that team, that you're actually using more senior people as a higher proportion. Certainly the partner's time has specifically gone up. And if you have that going across the whole country, whatever that is, percentage increase, there just aren't the numbers of new auditors coming into the profession to allow that sort of growth in demand to happen. So the supply and demand angle has completely shifted. And unfortunately, it's also happening at a time when I think it's fair to say the audit profession feels completely beaten up. It's a very difficult career choice to sell. It's not too hard for students arriving because they still get the qualification alongside it. But as soon as they get to 3 years or 4 years through the training process and they're now qualified as an accountant, to actually get them to stay in audit is a really difficult area, particularly as there's so many other things that within accountancy firms and outside that they could potentially use that qualification for.
Is that, Jonathan, because of the extra pressures on them because of this fewer staff, or is that because you feel that in the audit world, to use your words, there's a feeling auditors have been beaten up, and we're still within that sort of perfect storm of the poor practices that were sort of endemic a number of years ago that have given rise to enhanced regulation and claims, but we're still in that world. There's a perception that auditing isn't done as well as it still shouldn't be, notwithstanding the fact that standards have gone up. What's driving perhaps the reluctance to stay in the audit world then?
Well, I think it's a big mixture of the two. And I would say from my experiences and also what I'm seeing in other firms, that quality of audit has hugely increased over the last 3 or 4 years. What we are now doing in terms of consistent levels of high quality audit is miles away from where we were 3 or 4 years ago. And what's more, our regulator is telling us that, and also we do an external review internally, so to speak, and they're also saying precisely the same thing. In comparative terms, the quality has gone up, and I don't think we're at all alone on that. I think that's across the audit world. So I think the standards have enormously improved, but it's become quite a grim job. I've mentioned the 200 to 350 hour sort of mindset. Well, we've still got the same client portfolio. We've just got only, whatever it is, a 50% increase in people. So people are working phenomenal hours. And they've got this huge pressure that the audit quality has got to be really high. Often clients are still in the position where they need work to be completed within a timeline. And I think it's just, again, a function of putting lots of pressure on resourcing that we often get the resourcing wrong, bluntly. We often anticipate it's going to take this amount of time. And there are issues at the client, or there's an illness in one of the team, and it takes this amount of time. And as soon as you have that expansion, because we're so resource constrained, we haven't really got anywhere else to go. So the team just has to work harder. And they're just burnt out. There's a lot of them that have worked phenomenal hours. And so what would be the bit that would kind of make them feel perhaps that this is a profession that's worth staying in, if they could see a light at the end of the tunnel? This is a temporary situation and it's changing for the better. And that's the bit that I don't think we can really demonstrate, because those demands on people are incredibly real and they're not going away. And we're not growing the new teams of audit professionals that we would need to in order to be able to see a tangible change to that landscape. And I think it's also true that accountancy generally is still a very attractive profession, but it's an attractive profession outside of audit. And so the perverse situation that we've got is, and it's challenging to deal with, is audit becoming less attractive unless you really have the mindset that says, I find this interesting. And there are few of those. So that's less attractive, but other demands on accountants are increasing. So you've got a world out there that genuinely looks greener, and people are obviously going for that.
Is that potentially going to change as we move into recessionary times? I mean, are auditors still going to be busy, notwithstanding that there's going to be an economic downturn? Will that, if they are, will that hopefully draw in accountants who are less busy, say on the corporate transactional side, on the corporate finance side?
Yeah, it's a really interesting question. So what happens in recessions? In the past, what happens is we get shed loads of new challenging issues. Going concern becomes much more difficult. A lot of the estimates become much more difficult. We have to do a lot more work on cash flow forecasting and things like that. So recessions and also on the recoverability of balances owed to the business by other corporates. So recessions tend to increase the amount of work in relation to the entity. They tend to reduce the acquisitive nature of some businesses, and that obviously has quite a lot of challenges. So we get some reduction from that side. And frankly, some businesses just simply go bust. So if you like, the volume of work sort of shrinks. There are factors which make it go up a bit, but not by very much. What tends to happen in the past is, because we didn't see audit as being a very strong discipline all of its own self, is exactly what you just were alluding to. Transactions starting to dry up, we hoover up people out of there, the best from there typically, the ones that we really want to keep, and we throw them into audit where there's usually some capacity that we can put them in. And then when times start to pick up again, the idea broadly is they've been busy, we now put them back into the transaction stream. Under the new world that we live in, where quality is such an important hierarchy, quite an important criteria for everything that we do, they're not qualified to do audit. We can't let them into the audit world. And so very consciously, we've actually already had discussions broadly about the shifting of people into audit. We are not allowing other parts of our operating activities to go into audit unless they are committing to effectively a pretty well permanent shift, and then we will retrain them. So it has shifted on that, in that sense. And I think in reality, because people are so flat out at the moment, if we did lose 10% of our clients because recession hit, I actually think there'll be a huge amount of sighs of relief. It's a very different world from the world it used to be, where the dynamic you mentioned would have happened.
And that's very interesting. I mean, just from a sort of, I guess, a claims perspective, and as for professional indemnity insurers, the profile of firms doing audits, they will scrutinise very carefully the proposal form, the amount of audit work the firm does. There's a potential paradox here in that, if one were to look back, say 4 or 5 years at the audit world then, and then now as you have done, and we can see that how much standards have improved, and hopefully that will iron out the seeds of future claims. However, the potential paradox that you've identified is that unless you get more auditors into your world, then claims are still going to arise, but through different causes, not through necessarily a lack of expertise, but through just simply overwork or mistakes being made because there just isn't enough resource dealing with the work.
Yes, I absolutely can see that happening. The underlying pressures for auditors not doing the job properly have shifted, in the sense that there's this external scrutiny and there's the challenge internally, and there are much more procedures around safeguarding quality of the audit, I would say, across all of the audit profession, certainly, but particularly in the larger firms. So that's very much a positive and will reduce, hopefully, future claims. But you still got this underlying point that individual partners are under pressure to generate profits. And if all they've got is rubbish audit clients that are difficult to work on, and they have to do lots of hours in order to achieve a quality audit, they will be under pressure one way or the other to cut corners on that audit, and in particular in difficult times. In times when, to give for instance, perhaps the audit manager who's driving the main thrust of the audit work goes off sick, or you have a team and there's something else that crops up and the whole of the team is taken off and put onto another audit. In fact, that I've seen happen not uncommonly. If you have a new client and it's considered to be very prestigious, it's not uncommon for the main audit teams, from particularly those which are unprofitable, to be taken off, and you just lose the lot. And then you're struggling. Then you've got, in this perfect storm I just described, you've got no manager, no audit team. Who's going to do the audit work? Well, the answer is you're going to rope in whoever you can, and it's going to be bits and pieces. It's going to be really difficult to control. So there's a lot of pressure in those circumstances to accept substandard work. I think there will be circumstances where businesses, audit firms, get into some difficulties and pitch for work where they aren't really skilled and they don't really have that sector expertise. They don't have the resources to do it or whatever, but simply because they need to in order to maintain their growth or their profitability. And I think we will still have quite a few firms that do not have enough focus on the individual pressure on individual partners, as opposed to what's in the best interest of the firm as a whole. The firms that I think will thrive in this environment will be ones that maintain a really strong culture, but have a very explicit mindset that really says quality of the audit is the number one criteria, and we accept lack of profitability in certain circumstances if that is required in order to get to the threshold of a high quality audit. We are unfortunately going to see, I think it was almost inevitable, that this trend that we've got at the moment that's driving forward quality, I think at some point it will start to sort of weaken, and there will be these firms that go for growth or go for profitability, and unfortunately will then fall foul of subsequent litigation.
Well, some more bumps in the road as far as I'm concerned.
Yeah.
But I guess from underwriters' perspective, it's just drawing on what you've said, it's a laser focus on the proposal form and the culture of the firm and how it goes about its audit, who's doing the audit. And there are some very good firms out there with probably much lower risk profiles than perhaps they would have had 5 or 10 years ago. So it's not all bad news, but there's still potential.
Absolutely. And just on that point, there are 1 or 2 firms, and I would love to name them, but I suspect I probably can't, where you can say that if you go back 5 years ago, certainly 5 to 10 years ago, culturally, they were in a complete mess. They had very little in the way of centralized procedures that people had to follow. They almost allowed the engagement partners to choose their own approach. And because there was this same point really, but this absence of really in-depth knowledge of how auditing is meant to work, they were doing rubbish work. And those firms have ended up with huge amounts of criticism from the FRC, not necessarily on those explicit points, but just generally, and also a lot of litigation, quite a bit of which I've been personally involved with. Those same firms, though, I think, or at least the one firm I'm really thinking of, have really grasped the nettle since. They've really said, you know, we've got a problem with our culture. We're going to focus on that. We've got a problem with a lack of central procedures. We're going to really impose those across the whole of the firm. You can go too far on that, by the way, but nevertheless, from where they were, it was necessary to really impose it. And now the quality coming out of that firm is substantially better than it was. So it is doable. Yes. If you have management focus on it, saying it's unacceptable where we were, we really do need to change.
That's very interesting. And I was going to sort of pull this together by asking you, you know, as an expert, we've looked at firms, we've looked at insurers, but as an expert, perhaps what would be perhaps the single most important risk management step that a firm focused on auditing could change to reduce the propensity for claims in the future?
I think it is the culture. I think it is fundamentally the drive for quality has to be at the center of everything in the business. And what goes alongside that has got to be performance measures, the way in which the business structures its reward packages, particularly for senior people, the way in which the business promotes and indeed even recruits. All of that needs to be joined together with this overarching theme of it. Quality is what really matters to us. Of course, there has to be a profitability element to it, but the fundamental main driver has got to be quality, and they must be ruthless in saying we're not going to sacrifice quality for any other purpose.
Thank you. That's extremely helpful. And it's been fascinating talking to you today. I'm ever so grateful. Thank you very much for joining us, Jonathan. And for the audience, thank you very much for listening. And please look out for the next edition in 2023 of A Brief Account. Thank you and goodbye.